Multitasking at its finest here at TMC today
Always.
is what I think everybody in the mortgage industry is very accustomed to doing. So thanks everyone for joining us. I see a bunch of people coming in very quickly right now. We will get started in just a few minutes. So yeah, so how was your holidays? Good holidays? Seems like a long time ago now already.
Yeah, it does. Yeah, really good. Really good. Pretty quiet. And we here actually got snow. We don't get snow. It's been about 3 years since we got snow. So
Oh
I'm
no.
one of the very few who's very much enjoyed it.
Oh, well, good. Good
Very
for you.
fun.
I'll try to send you some more
Yeah.
often. I'm in Minnesota, so it's a
Oh,
staple
yeah,
for us
yeah.
at this time of year. Although
Yes.
our friends to the south of us have gotten a lot more than we have this year already. It kind of hit the St. Louis, Kansas City,
Hmm.
Iowa zone more than it did us. So yeah. Well, I think we'll get going here. Thanks everyone for joining us today. This is the last week in mortgage today. If there's anybody on here I haven't met before, I am Faith Howard Mooney, the SVP of Member Engagement here at the Mortgage Collaborative. And I'm super lucky because I just found out that one of my member benefits advocates, Ryan Carr, got Erin Kelly to do something that she's never done before. So Erin Kelly is the SVP of Mortgage Operations at Local First Bank, a company you're located in Southern Pines, North Carolina. So if you just got snow, that probably is very unusual for you.
Yeah, not very often. I'm in Greensboro,
Okay.
but I think Southern Pines probably didn't get much. We
Yeah.
got a little bit, and it was great.
Yeah. Well, that's super. That is super fun. Like I said, I will send you any that you want from here for sure. So you want to just share just a little bit about who Local First Bank is? You joined TMC in November of 2023. So we just surpassed a year. You want to just give a
Yeah,
little bit of a debrief of who the company is so everybody knows kind of the viewpoint that you're talking from?
sure. So First Bank, exciting news. This is a good time to do this. First Bank is about to turn 90. Our birthday is
Wow.
February 8th. So
Wow.
we'll be having cake. It'll be great. Um, so we're growing. So we've crossed the 10 billion mark, but we started as a very, very small community bank during the Depression. And we have primarily been in really rural areas. So it's really only been in the last couple years, I would say, that we've really started expanding into more of the metro markets. So when you talk about community bank serving people on the ground, that's us.
Yeah.
It's
Yeah.
really, really, and big banks. So mortgage is a much smaller part of that as we're growing. So we're really complementary to the bank, but we're not a forward driving profit center for the bank. So we support
Okay.
our customers, and that's really our main focus
Okay.
is meeting our customers for what they need.
Yeah. So, but over the 10 billion mark, we would call you a large bank at this point. But on the mortgage,
Right. Yeah, yeah.
yeah, because
The bank is large. The mortgage department is not quite as large.
I was
Let's
gonna
put it that way. So perspective, I came from a bank where the bank was 750 million and the mortgage was doing 1.2 billion. So
say,
we flipped that
yeah, yeah, exactly.
pretty significantly.
Exactly. Well, that's fabulous. Although at the $10 billion mark, that's kind of a pivotal place for a bank once you hit or exceed
Yeah.
that, because your compliance requirements and everything really adjust significantly,
Hmm.
or audit requirements after that point, correct?
Yes, we've noticed.
Not that you want more of those, but yeah, yeah,
No,
exactly.
we've noticed. Yeah,
Yeah,
it's all good though. It's
yeah.
all been really good.
That is fabulous. That's a really good combination of a large bank, but yet, the mortgage piece of it being very, very involved in the community. And we'll talk about like some of those things that are happening in the communities. And I'm just going to want to get your feedback and perspective. People on the call with us, you know how this works. Chime in, send us notes in the chat on how you feel about the topics that we're talking about. We would love to share kind of how you feel about them as well. So, um, I was reading an article and this totally made sense to me, but I know that there are more than kind of what showcased in this article, but it was from MBA. So you would expect it to be mortgage focused. It talked about how companies that are related to the housing market are impacted. So like we know mortgage is down. We work in it, we're in it every day, all day long. But this article went into like real estate firms, and they did talk about mortgage lender members, and things like that. What other types of impacts have you seen in the market that you're in, um, that you think are an impact because of fewer people buying homes? Are there any?
Well, I mean, there's two things that come to mind for me. One is there's a lot more people renting, and they're just not looking for a mortgage. Renting's just a better option. And so we're seeing that it's a lot more of the only people who are wanting a mortgage and buying a home are people who have a lot of money. So it's a lot of jumbo, a lot of bigger properties. And then the other thing that we're seeing, and as a community bank, we see more of this too, is there's a lot more demand for construction.
Ah,
So that's what we're seeing.
yeah. And in your market on the construction side, is construction, has it always been really prevalent? I would think Greensboro, yes, but maybe in some of the other markets that you serve, maybe not so much as you get into more of the outlying areas.
Well, I mean, North Carolina's been pretty rural for a long time. And so we had construction loans all over the state and South Carolina. So for us, it's not really different. Having construction in the city versus having construction in rural areas, it's all the same. There's strong demand for construction, but I would say there is more demand for it now than there has been maybe over the last 5-10 years.
Yeah. And it's that good old housing supply that has never,
Right.
I mean, people think it's a new
Right.
issue, I think, a lot of the time, but it's really been kind of a long-standing issue where it hasn't kept up,
Mm-hmm.
and now it's just kind of reached a critical mass. So I do think that construction lending is going to be something that it's great that you have experience with it. You're used to it, because I do think it is going to be one of the impacts that are in the market for 2025, and how people are probably going to pick up some volume back is going to be in the new construction area
Mm-hmm.
for sure. Let's talk a little bit about some of the things that are going on like over in the world. So you're in North Carolina. So North Carolina also, not only did you get snow, but you also just had like a storm come through, a hurricane or
Mm-hmm.
storm that did a lot of damage there. Obviously, we've got a lot of things that are going on in California right now with the fires that just happened. There was in the news just this last week with the California wildfire that the government is going to step in, cover like 100% of the loss that is there. Interested in finding out whether, like, what happened in North Carolina, because the flooding that happened there is like something that's never happened before,
Yeah.
and
Yeah.
not a
It was
normal.
significant. No. So, one of the things that we've talked about is, there's if you live at the coast and you don't have flood insurance, shame on you. Let's judge the victims. But in our case, a lot of the folks, they're living hanging off the side of a mountain. The risk of flood is nothing, maybe mudslides, but still not even that. So, it was really impactful, really scary, strange stuff. One of the ladies on my team called me. She was completely no communication other than emergency texts for a week. And then I finally got through to her, and she said, "I don't think I can come to work. There's a sinkhole in my driveway." I said,
Oh
"No, you can't. Do you have food and water?" I mean, it was bad, and they were not prepared for it. But a lot of them, like I said, they're not in places that would flood. And then there are some lower lying areas near rivers, but we're talking 500-year floodplain. Nobody's thinking that there's going to be a flood. And
no.
you saw it on the news, it was significant.
Yeah. And what have you seen? I mean, as far as I know, that every lender is dealing with the fact that when you're qualifying people now, it used to be that insurance was a send us your binder, the day before you close kind of situation. That I understand has all changed because of the high cost of insurance. I know it's early still based on that happening. I'm sure there is some sort of a trickle down effect. But what have you found has happened within, those climates? Have you seen a huge increase in insurance costs in your area outside of even that happening? And then, like, any ideas on like what you think the impact of that is going to be for those people that are in those markets now that have had this unusual event happen?
We've already had significant insurance increases before Helene. So I would say that Helene hasn't yet impacted, a policy order today isn't a whole lot worse, but it will be.
Yeah,
I mean, it's coming.
yeah.
Absolutely will be.
And do you think that in those areas that have had that, I mean, I'm sure people like one of the issues with that has happened in California is because they've obviously had those huge increases. They had a couple of large companies that even pulled out of insuring
Hmm.
people at one point in time for homes. There are a couple of people within network that we know that families have lost some of their homes in that market, and their bill that they would get from like the insurance that you could get if you don't have an insurance company providing you insurance was $15,000 a year. And so many of
Hmm.
those people decided to take a risk and risk not having insurance versus having a $15,000 bill for the year.
Yeah.
Um, do you think do you think that people will look at North Carolina as this was a one-time weird fluky thing that happened? Or do you think that those people now will be faced with they end up in a flood plain? If they're smart, they'll get flood insurance if they can get it. What do you kind of think the situation there is, or will people risk it and go without insurance?
I had to say it, in every market, there's always going to be people who will risk it and go without insurance.
Yeah,
And there are some areas, at least in Western North Carolina, that are really, I mean, they're pretty poor areas, and those folks they're not going to be able to afford the insurance. Just they're not going to. So long term, I just don't know. This really did feel like a complete one-off.
yeah,
But I'm not in the insurance industry. I don't know. We've had a lot more named storms in the last several years. They're looking, I mean, those are people who know things I don't know. They may look at North Carolina and say, oh, it's terrible. There's going to be tons of these. This is what we're doing, but that's not me.
yeah. Well, one of the things that I've talked about a couple of different times on the show that has come up is the idea of implementing an overall another fee, no surprise there within the mortgage process, but another
Right.
fee that essentially funds a fund that covers homes, that helps fund some of these dramatic things that have happened. So I'm from the Midwest, where we have storms, we have things like tornadoes and, things
Yeah.
like that. Typically not, I would say if my house flooded here, the whole entire like Minneapolis metro market would probably be underwater. And so, don't envision kind of that kind of thing happening. And that to me feels like a penalty to people that either have these unusual things happen or that you're funding the people that are building in. I mean, you have a lot of coastal areas
Hmm.
where
Yeah, yeah.
it's very predictable that once every so often you're going to have flooding and
Right.
people continue to rebuild.
Right. Once
Any
a year, at least.
once a year at least. Okay.
Yeah.
Realizing that those places are beautiful and people are always going to rebuild there. Um, do you do you think that that's something that would gain traction? I know it's in the early stages of being talked about, but like adding further costs to a mortgage to cover people that have been involved in disaster areas. How do you feel about that?
I would think that most people would take that as I'm not the one that chose to live there. I don't want to pay it.
Yeah.
But I do think it makes me think it almost could be something like you get your down payment assistance and you get your insurance assistance, or they kind of go somehow hand in hand. Like, it's not the same as an MCC credit, but like you can sign up for some kind of something that you get insurance assistance for some period of time. Seems like it might have more traction and less pushback. Like, as if I get to make these things up. But that seems like it would be more, right, yeah, more palatable. I can just hear our loan officer saying, I have to sell a fee for what? But they're not the ones that need it. Yeah.
Yeah. Yeah, I
Yeah,
think it would be hard too. I think it's also hard when you add in an extra layer of bureaucracy there. I mean, then you have a
right,
compliance issue of have you done the right things for that house
right,
that's in that area? But then you also have
right.
somebody that's distributing those funds, and do those funds really go where they should go? And I think
Yeah.
the whole entire Midwest would probably rebel. I'm kind of with you that it's like, unless it's an area that's had some of those challenges before, like, why are we paying the higher cost? um, to somebody that wants to live in a very beautiful place, but no, it has challenges from a weather perspective as well. Yeah, but there's a lot going on around that. As a matter of fact, HUD right now is requesting public input on solutions for the insurance crisis um,
Right.
caused by extreme weather events. I do think I always love to look at the terms that people are using as they're talking about things. And one of the things that was in this article talking about them seeking comment was that they have removed the term climate change from their vocabulary and now are
Mm,
using extreme weather events instead. So they don't want to talk about that, like everybody's world. I mean, we were talking before we got on here. We missed the snow in the last couple of weeks, but I've got two team members that are in St. Louis. They got hit really hard in St. Louis with, like, I don't know, 9 or 10 inches of snow, which is like abnormal. We're kind of accustomed to it here. We have everything built into our society to handle it. Our houses are built a little bit different to manage that cold weather. But I don't think that anybody can deny anymore that there is climate change going on. But we're going to change the term to extreme weather events instead. So I think that's kind of just silly. But yeah. One of the articles that I had sent over to you that I looked at this week as well, and you talked a little bit about this. Um, Monthly mortgage payments have went up almost triple in the
mhm.
past decade. And part of that, of course, is interest rates have gone up. They're no longer in that 2, 3 range anymore. Part of it is the
Right.
cost of housing in and of itself has gone way higher. And this article talked a lot about renters are just staying put because of that. And I
Hmm.
know that you said that you've seen some of that. So, would you call what you have going on in the markets that you serve, like, has there been less demand to get into housing because of that? And, or is it the cost is just too high, or is it there isn't any housing to get into? I'm sure it's probably a combination of all of those three things, but kind of what have you seen in the markets that you serve related to renting versus buying?
So I think it's really a combination. It's not affordable. Rent is cheaper. And, what we're seeing is, at least in our state where we are, the population that can and will get a mortgage and buy a house is a lot older. So there's a lot of really young people who are renting and saying, this works for me. I'm good. I'm not even going to try. The few young people who are interested look out there and say, I can't afford it. There's no point. And so, it's really people who have money who are buying houses and getting mortgages right now, and renting looks really good.
Wow. So I think the average age is up to like 38 or 37 for a first time home buyer. So it has increased by, I think, almost 5 years. I could be wrong, so nobody quote me on that.
Yeah, I
Um,
think it's higher here.
Is that right?
I think so. I don't have the exact figures, but it's higher. It's higher than you would think. And just thinking back to, I guess I'm aging myself, but I remember being in my early 20s and thinking, I have to get a house. I have to get a house. I need to do this now. It's not like that anymore.
Yeah.
Just not at
Yeah.
all. They're not even looking.
Yeah, I now kind of understand. My husband and I at the time built our first house. We were 28 and we built a home for
Yeah.
our first home. And I remember my parents thinking that you are crazy. Um,
Hmm.
but at that point in time here, it was like a lot less expensive to own a home. I mean,
Yep.
it was definitely seen as the main way to be able to, as a younger person, because your salaries weren't really commensurate either, but to build
Right.
wealth and establish yourself
Yeah.
um, with wealth. So it kind of makes me sad to think that people like are delaying that because then does that, I guess if rents here are almost exactly the same thing, I would say, as a mortgage payment is for a smaller home. So rents here are also really high. So then you don't have as much of that gap. But hopefully they're saving some money and trying to attain that wealth for their family in a different way. But I also think that with the high cost of groceries and everything else that we've experienced, I don't know as a lot of people are saving a lot right now.
Hmm.
Yeah,
That's part of the issue. I mean, even if your mortgage payment or your rent payment is higher than, say, you could get a mortgage for, if you can't make any form of down payment and you're not aware of any of the other options,
yeah.
you're not even talking to anybody to find out of another way to get a down payment. Like down payment assistance just isn't on the radar.
That's true. Education has become like a very, very critical thing for,
Hmm.
us as an industry to do because I think that there are a lot of options a lot of the time that people just, I mean, that whole thought process or idea of you have to have 20% down, it's
Right.
still out there.
Yeah. Yeah.
And
Yeah.
I don't understand that one, but maybe it's because I've been in mortgage forever. So, that it's like, it's still out there that people feel like you have to have that size of a down payment. So maybe, focus a lot on, education out to some of those folks. Are you finding that, I mean, if your transactions are people that are older and they have money to buy, are you involved in a lot of transactions that involve DPA? In the market that you are in? Because I know some markets, that's how they're getting their business right now. So they're trying to work with people, obviously, that haven't owned a home before and have challenges with down payment, with gaining a down payment. And so they're using multiple down payment resources to do that.
Yeah.
Is that what? So you smiled and laughed at that one. So I take it that
Oh,
you've
yeah.
been
We've got those
involved in some of those.
up
Yeah.
to three. Yes. I think when
Okay.
we got three down payment assistance on one loan, we said maybe this is enough.
Yeah. But you've been found a way to make it work though for the
Oh,
consumer.
yeah, absolutely. Yeah, yeah.
Yeah. So fair to say, what you're experiencing and seeing in your world, that vanilla type of transactions that just fly through, they're probably fewer than they were before.
Yes.
So you're working a lot harder for a smaller number of
Yes.
transactions happening. Do you
Yeah.
think?
Yeah. Start to finish, everyone's lamenting that. Loan officers through to underwriting, closers, everyone's finding things more complicated.
Yeah, yeah. And of course, compliance hasn't decreased, or compliance related issues. We were talking about audit related issues a little bit earlier. Those things haven't decreased. And so I'm sure documentation on loan transactions and everything that has all increased as well as you're working through the process of those harder non vanilla loans. So we
Yep.
talked a little bit about new construction and kind of you see that as something that's happening in all of your areas. There's a Virginia-based company out there that has successfully constructed a duplex that can be sold for under $100,000, um, giving a more affordable housing option to some people. Share with me anything that you've seen in your market. Is there anything unusual that you've seen in your market related to different types of housing or different types of construction or things like that that have kind of been, even if it's on a small scale, kind of like a game changer for people in your areas?
Not that I'm aware of that's a game changer. Certainly not like in the mortgage world. I've seen a lot of growth in tiny houses,
Okay.
but not necessarily, they're not mortgaged. People can buy them outright.
Yeah.
Um,
More of a
so a
personal
lot more of
property.
that.
Yeah.
Yes, as long as you have a place to put it. It's been a solution here in Greensboro. They're using that for homeless
Oh, is
populations.
that
They're
right?
working on trying to address that need with tiny homes. So I've seen more of that, but in terms of a game changer for the mortgage industry, not that I'm aware of.
Yeah. Yeah. More multifamily moving into your environment or still primarily single family dwellings on the construction side of business?
So I don't do that. So I'm going to step out and say I don't know, because I'm going to say things that are inaccurate.
Perfectly fine. Perfectly fine to be able to do that. That is perfectly fine. Um, Another article that I looked at this week talked a little bit about DPA and borrowers eligible for DPA in working with FHA transactions. It revealed that only half of the borrowers that were eligible for a down payment assistance program in working with the FHA received that.
Mhm.
Do you think it's lack of knowledge of the programs out there, or and what do you think would cause that? That seems like kind of like that would have a bigger impact if people were taking advantage of the benefits that are out there for them. Do you think it's just lack of somebody knowing that that was available to them to assist them, or what do you think would cause that 50% of people who are eligible for DPA not pursuing that?
I mean, I think some of it's on the borrowers not knowing it's available and not asking. And I think some of it's on loan officers. I know when we first started rolling out down payment assistance programs, and it's been many years, but when we first did, we had loan officers who said, "Oh, it's too complicated. I can't do it. I don't know. I'm not sure." And then, sure as anything, when we said, "Well, here's how it works," they said, "Oh, okay, I can do that." Like they were all in, but the initial kind of pushback on, "Oh, it's another complicated product. I can't, I don't think this is going to work," was there. And, certainly now that's not an issue, but it was. So, I mean, maybe there could still be some of that out there. I don't know. I
Yeah.
do think borrowers are not aware. It's not something that's really out there in the ways. If you know, you know. If you don't, it's not available.
In North Carolina, or the market that you've supported, or anywhere that you've been in mortgage before, do you have, so this is one thing that I've always said that I think they need to do, teaching practical things in high school, I feel like has kind of gone astray in a
Yes.
certain sense, as budget
Hmm.
cuts happen and things. One of the things that I feel like, I mean, it should start in middle school actually, but and maybe even elementary, but financial planning for people, younger individuals. Is that something
Yep.
that you see a lot of in your area? I know it's become prevalent in many areas. We have some people within our network are involved in assisting with some of those things, which I think is just awesome.
Yeah.
Do you think it's become much more prevalent in your area to kind of try to help people so that they do know to ask for things, or, their research just isn't, if you don't know the right question to ask, you're not going to find it when you're Googling, right? Um,
Yeah.
if you don't just know that something's out there, do you see that as part of the solution for getting potentially more people into homes and begin that wealth generation for their family?
It certainly would help. I mean, our bank definitely does that. We go into elementary schools and middle schools all the
Oh,
time
awesome.
and teach kids to save and teach them about all of those things. Whether they remember it or not later, we'll see.
Yeah.
But I think it is being done. I do think it's complicated. And I think people kind of, oh, a mortgage is a really big deal. And then you start adding all of these other layers and they get nervous.
Yeah.
I think some people are more up for asking the question. I do think some of the changes around regulatory requirements for outreach have made a difference. It does mean that there are more people out there talking to people and explaining and giving information. I do think that there has been, maybe in the last 10 years too, been an uptick in realtors knowing more about down payment assistance and helping their borrowers to ask about it. But there's still more that needs to be done, let's say.
Yeah,
We're not there yet.
yeah, I agree with that completely. I'm involved in my community here. I hear it all the time. Where I hear it most, kind of ironically, is at the pool in the summer of people talking about buying and selling. And yeah, I want to move somewhere different, but I can't buy a smaller house for less than, what the current home that I'm living in is here. I've heard it on a number of occasions, but some of the things that they say, I just want to cringe because it's what they've heard in the news and it's kind of like not
Yeah.
exactly accurate. Um,
Right.
and so I think we do need to step back from time to time. And we're the ones that, like, I don't even work in the mortgage process anymore. So I don't have all the details, but I definitely know a lot of really good people I could refer someone to that would give them all the details. But I think that there are a lot of misperceptions out there. And that's one of our biggest things that we need to do is help educate people on like what the options are and what it means to your financial future. And we've got a lot of great people in the TMC family that are doing that. And I'm glad that we had a chance to talk today. So I now know that you are too. So yeah, we're at the bottom of the hour. It goes by so fast. I appreciate your willingness to step out and do something you wouldn't normally do. Kudos to Ryan for looping you in and having you do this with us. You'll have to come back and do it again or do another show with us again. I would love to have you. It's been great talking with you today, Erin. Thanks for everyone for
Great
joining
talking with
us
you.
today. Yeah, we'll be back next Tuesday at the same time. Thank you.
Great.